Welcome to the latest Motley Fool Scoreboard. I'm on in Chocolate. We've got longtime fools, Dan Caplinger and Toby Bordelon, giving a 1 to 10 rating to the home cook's dream. It's Williams-Sonoma, ticker symbol WSM. First, we'll talk about the strength of Williams-Sonoma's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Dan's at a 7. Toby, you're at an 8.
Yeah, this is our favorite operator of home furnishing and decor and kitchenware retail chains, things like Williams-Sonoma, Pottery Barn, West Elm, Rejuvenation, that sort of stuff. I'm going to go with an 8 here for the business. It's a good business, strong brands with a lot of customer loyalty. Time actually ranked the company as the best retailer in their 2024 list of America's best mid-size company. It was 17 out of 500 overall, so really good there. Now, 2024 saw a decline in revenue, which isn't great, but that happens in retail from time to time. Better to maintain a profitable business than chase subpar revenue and become an unprofitable business, I think.
Yeah, my 7 reflects definitely strong brand awareness, namesake segment, the Williams-Sonoma segment, well known. Pottery Barn, very popular, very loyal customer followings, as Toby mentioned. I worry a little bit about aging demographics. I don't know how successful the brands have been at resonating with younger customers. It's sort of on the high end of the value spectrum, though, and so their demographic is always going to be a little bit older, probably. So I think that they're doing what they need to do.
Dan, you don't think the young kids like Williams-Sonoma? Toby talked about a Time magazine reference. They're in the rankings. Come on, Time magazine. Nothing screams
Is that still
Instagram
on the newsstand
like
on it? Anybody know
right.
what we're talking about?
Yeah, get some juicy fruit, Let's talk about management. 10 is Warren Buffett. A 1 is Homer Simpson. Dan's at a 9. We'll get to that. Toby, you're at a 7.
Yeah, I think this team has done a great job with the business, though they have struggled a bit recently to keep the growth going. If you look on something like Glassdoor, too, you might be worried about the lower ratings, but I think that's to be expected to some extent from a retail business like this. CEO Laura Albert has led this business since 2010, and she's been with the company since 1995, right? She's been a huge part of the company's growth. Under her tenure, the company's grown to include the Pottery Barn, West Elm, Mark and Graham, and more brands. And CFO Jeff Howie is also long tenured. He's been with the company since 2002.
I tend to be pretty laser focused on CEOs delivering shareholder performance, and there's absolutely nothing to complain about Williams-Sonoma's shareholder performance. We've seen quadrupling of the stock price in just the last several years. Albert's got her fingers on the pulse of the business, 30 years at the business, 15 years as CEO. Strong roles in moving Williams-Sonoma into the 21st century with digital innovation, making sure that you've got an e-commerce strategy, bringing new brands to the table. I think that Albert's done all the right things, and I'm less inclined where I take the kind of the financial issues. We have a separate talk for financials, which we're just about to get into. That's where you're going to see the score take a little bit of a hit there. I don't blame that on Albert necessarily with the stock price doing well.
Let's talk about the financials then. A 10 is Fortress. A 1 is Yikes. Dan's at a 7. Toby, you're at an 8.
Yeah, I don't love the revenue declines we've seen, but the business is still profitable. Earnings are growing. Things are looking better right now. Margins are improving. Inventory levels are growing. They're not dramatically so, and that could be good if sales follow this. Cash balance looks very healthy here. There's no long-term debt on the balance sheet. They do have a lot of operating lease liabilities, to be aware of that. Cash flow is lower this year than it was last year, which bears a bit of watching, but it's still at a good level, I think. And a lot of that is due to an inventory buildup last year after we saw inventory declines the year before.
I'm a little less forgiving of the revenue slump, giving them a 7, but profits, I'm also a little concerned. Profits haven't yet quite gotten back up to what we saw in 2021. Admittedly, a very strong year for home-oriented companies. I will note, though, they do get a bump in the score in part just because there's pain really across the high-end furnishings industry. Williams-Sonoma definitely not an outlier in this. In fact, Williams-Sonoma actually compares pretty well against some of its competitors, and so very comfortable giving it a 7 here.
All right, Dan, let's move on to that valuation. How well will Williams-Sonoma stock over the next 5 years? How safe is it? A 10's a sure thing. A 1's a lottery ticket. Are you going to have your usual today?
As usual, yes, sir. My usual kind of under consensus market call, 5 to 10%. That for me is an average market weight at this point. Safety score of 6. Again, typical market call for me. We've also seen strong returns in the stock price in recent years. I think that you might get some mean reversion there going forward, sort of pushing towards the lower end of that 5 to 10% range. Safety score of 6 in part reflects the possibility that if Williams-Sonoma can't get its sales engine moving forward again, there may be a limited amount of patience that investors have before this stock ends up seeing a pullback.
Yeah, I went with 5 to 10% too. The stock has soared recently, and I worry we may see a plateau coming in the future years here. I expect this to be a market matcher for at least the next few years, maybe a slight market beater. On safety, going with a 7. I think they're reasonably safe relative to the industry. But hey, they will get hit in a consumer spending downturn, so you got to be aware of that.
Time for everyone's favorite Top It. Dan, is there a company in Williams-Sonoma space that you like better?
Not from an investing standpoint. You know, when it comes to entertaining quarterly commentaries and unapologetic stretch goals, I really love following RH, the parent of Restoration Hardware. Gary Friedman, never afraid to embrace high-end consumer mentality with all kinds of fascinating things. But RH's financials have seen even more volatility in recent years than Williams-Sonoma. The valuation at RH not particularly favorable compared to Williams-Sonoma. I think Williams-Sonoma actually has a pretty strong position in this industry if you're looking to invest in it.
Yeah, I don't really have a different company I like better either. You know, the lifestyle brand can be tough if consumers suddenly decide they don't like the lifestyle you are offering. But Williams-Sonoma generally is good at adapting as needed and offering a diverse portfolio of brands to target different tastes there. Now, Yeti's intriguing to me if you're into the outdoor lifestyle, but it's not really the same target market at all.
Thank you to Toby and to Dan. They've given Williams-Sonoma a decent overall score of 6.9 out of 10 with higher scores on the fundamentals. I've owned it in the past, and I'd own it again if it dips quite a bit on weakness. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Interactive Brokers. Till then, Fool on. Welcome to the latest Motley Fool scoreboard. I'm on Chockavaloon. We've got long time. Oh wait, sorry. Let's one thing before.